Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson, we continued our Forex trading course with a look at what a pip is and something which is known as fractional pips. In today's lesson, we're going to continue our discussion on the logistics of Forex trading with a look at how to calculate profits and losses in the Forex market. So let's get started.
As the Forex market does not have standardized trade sizes, and because many currency pairs are not quoted in terms of US dollars, the method for calculating profits and losses in the Forex market is a little more difficult than in many other markets. Luckily, most trading platforms list out how much the value of a 1 pip move in the market is on the platform, so clients don't have to calculate this themselves. With this in mind, let's quickly log into our real-time demo trading account so we can see what I'm talking about. If you haven't done so already, I encourage you to click the link above this video if you're watching on InformedTrades.com, or to the right of this video if you're watching on YouTube, and register for a free real-time demo so you can follow along as well. Once inside the platform, you should see the dealing rates window. And in that window, you should see two tabs at the top, one that says Advanced Dealing Rates and one that says Simple Dealing Rates. Click the link that says Simple Dealing Rates, which should switch over to a different looking quotes window with a bunch of columns in it. If you scroll over to the right of that window, you should see a column which says Pip Cost. The numbers listed under this column are the value of a 1 pip move in the market for each currency pair. To calculate your profit or loss, all you really need to do is take that number and multiply it by the number of pips of potential profit and loss you have on the trade. Once you have that number, you then multiply that by the number of contracts you're trading, and this will give you the total amount of potential profit and loss on the trade in US dollars. To calculate your profit or loss, all you really need to do is take the number in the pip cost line of the dealing rates window and multiply it by the number of pips of potential profit and loss you have on the trade. Once you have this number, you then multiply this number by the number of contracts that you are trading, and this will give you the total potential profit and loss on the trade in US dollars. As an example, let's say that I'm trading 3 contracts of dollar Swiss. My profit target on the trade is 100 pips, and my loss target on the trade is 50 pips away from my entry price. To get the total amount of potential risk and reward on this trade, I would simply multiply the pip value of dollar Swiss, which as of this lesson is 9.95, by 100, which is my profit target, which would give me $995. This is my potential profit on the trade per 1 contract. As I'm trading 3 contracts, I would then multiply 995 times 3, which would give me $2,985 in potential profit. On the loss side, I would take my $50 stop loss target and multiply this by the 9.95 pip cost of dollar Swiss as of this lesson. This would give me $497.50 in potential loss per 1 contract. As I'm trading 3 contracts, I would then take the $497.50 and multiply that by the 3 contracts I'm trading, which would give me $1,492.50 in potential loss. As you'll notice if you scroll down the pip cost column of the real-time demo trading platform, the value of a 1 pip move in currency pairs where the US dollar is the counter or second currency in the pair is always $10. This is because, as we've learned in earlier lessons, a currency quote represents how many of the second currency in the pair it takes to buy one of the first currency. As we're trading contract sizes of 100,000 of the base currency, a 1 pip move in 4 decimal place currency pairs is equal to 0.0001 times 100,000, which equals $10 in currency pairs where the US dollar is the second currency in the pair. As you'll also notice, for currency pairs where the US dollar is not the second currency in the pair, the value of a 1 pip move in the market varies. This is because in those instances, the counter currency or the second currency in the pair is not the US dollar, and therefore the value of a 1 pip move in the market has to be converted back into US dollars at the current exchange rate. To look at an example where the US dollar is not the second currency in the pair, let's take the dollar Swiss. Here, a 1 pip move in the market is equal to 0.0001 Swiss francs. So to get the value of a 1 pip move in the market, we would take 0.0001 Swiss francs and multiply it by the 100,000 contract size, which gives us 10 Swiss francs as the value of a 1 pip move in the market in the dollar Swiss currency pair. So the reason why the pip value fluctuates where the dollar is not the second currency in the pair is because we must then take that, in this example, 10 Swiss francs and convert it back into US dollars to get the US dollar amount that the pip value is worth, the US dollar pip value, which is done at the current exchange rate of the US dollar and the Swiss franc. Okay? Since the calculations are done for you on the platform, don't worry if you don't understand all the math here. The two things that it's important to understand are that for any currency pair where the US dollar is the second currency in the pair, the value of a 1 pip move in the market will always be $10. For any currency pair where the US dollar is the counter currency in the pair, is not the second currency or counter currency in the pair, the value of a 1 pip move in the market will vary depending on the exchange rate of whatever currency is in the second place, is in the second spot of the currency pair. Okay? That's our lesson for today. In our next lesson, we'll learn about leverage and something which is known as trading on margin. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below. And good luck with your trading.